Hey, you guys, Tricia Turner here. This is Walk Away Wealthy, and we've been absent for about a month now. Just kind of took a break from doing the weekly podcast. It's been running on for 3 years. But the market, or the real estate market, has really gotten a lot of attention. If you're not paying attention to the market, you need to be. It's all over the news. The housing crash, housing crisis, home values are going down, interest rates are going up. What is going on? And you hear it from all over. Is it happening in Florida? What's going on in Dallas? What's going on in Ohio? You read the reports, foreclosures are up. So rather than wonder about these things, I thought, you know what? I have experts in my freaking hand that are my friends this is what we do. We're obsessed with the market. We study it. And so every week, Tuesday, 12 o'clock, we're back here live. We're going to be doing a market update and what's really going on in the market. And so we're going to kick this off with a very good friend of mine, Nick Good, who is a freaking beast. He's a real estate expert, not only just on real estate sales, but he's also very heavily involved in the mortgage side and investing, and just an all-around good guy. So welcome, Nick Good.
Thanks for having me.
Heck yeah, I'm excited to have you and have you kick this off with me, because I think it's so important for us to be talking about what are we seeing in Dallas? What are we seeing in Houston, Texas? Are foreclosures hitting the market? What should people do right now? So Nick, before we go all into that, because for people that don't know you, can you kind of tell everybody, I've told them all you're in Dallas, but can you give a little bit of your backstory?
Yeah, for sure. So I got in the business in 2005, licensed officially in 2007. And then just started building my real estate practice during the 2007. And then, of course, the 2008 crash happened, which everyone thought was the worst thing that could happen to their business. And I didn't know any better because I was already broke, not selling any houses. So it didn't really impact me. So I just went to work and today, one of my mentors says money changes hands when problems are solved. So I didn't know that saying back then. I just found ways to solve people's problems. So back then it was, people delinquent, they were upside down, underwater, with owing too much, and their home value wasn't worth what they owed. And so I just help people with short sales and navigating through that, and then helping investors and buyers get good opportunities on buying foreclosures. Today, fast forward, we went through COVID and everything shot through the roof, and that was against logically, it was against what we thought would happen, right? When you shut down the economy and you shut the world down, what do you think should happen? Well, everything should just go to shit. Yeah. And it didn't. It just took off. And so prices went skyrocketing. Inventory levels dropped and plummeted. And, there were the huge bidding wars. And so then in 2022, we saw interest rates skyrocket up. Everything went to a halt, and inventory went through the roof. Home sales went down, and no one was buying or selling, and it was just the end of the world. And so what we're seeing is that's not really the case, right? There's always it plays ping pong. It always goes one side or the other. And right now, the Dallas market is doing really, really well. Comparatively, right at this very moment, we're seeing actually home sale prices are up. Now they're not as high as last year. And in fact, when I really look at the report, we're only down in single family, and this is for pre-owned, I'm not including new construction. Single family pre-owned homes, we're only off, from this time last year to today, we're only off by less than 1%. The average sales price is $490,573. Last year in 2022 is $494,000.
That's crazy.
And if you look at year to date right now, though, starting from January, we've increased the average pre-owned home. Single family property has increased from the average sales price of $411 to $490. So we've gone pretty much skyrocketed back up. So home prices are not falling. Okay. We didn't hit that crash because we had a lot of home buyers like, you know what, Nick, we're going to wait till the crash.
Yep.
I was like, well, tell me what, I've been doing this a long time. What crash are we talking about? Because I don't know. If you know something I don't know, please let me know.
Yeah.
Because I was like, this isn't happening. We didn't have, the inventory levels did not support a crash. Mm-hmm. Right? The equity that homeowners have in their houses does not support a crash. And so what we're seeing at this very moment, we had our weekly sales meeting today. What I'm seeing, again, money changes hands when problems are solved. Yeah. Home buyers hated the COVID real estate market. They were having to go the average list to sales price ratio during COVID, March, April, and May. The average list to sales price was 104%, almost 105. So that means on average, a buyer was having to pay 5% over asking price. And
Yep.
now what we're seeing is homeowners come off about 3 to 4%.
Yeah.
And so for buyers at this very, very moment, this is their buying window of opportunity because interest rates are high. We're bouncing above 7%.
Yep.
And that sounds scary when you look at the 2.75 to 3% ranges that we saw, for the last decade, and especially during COVID. But what we're able to do as a home buyer is you're able to negotiate and you're able to get sellers to give you concessions, and you can buy your interest rate down. You can get your closing costs paid for. So you're actually coming less out of pocket than you would be in any other real estate market that we'd been in.
Yep.
Which cash is king. I'd much rather, hold my cash in my bank account and not put it all into real estate. Because if something were to happen, then you're not going to be able to liquidate as quickly.
No.
Or at all. And so now all your money's tied up. So it's a huge opportunity right now for buyers.
That's interesting to hear. And you guys, Nick runs a big team there in Dallas, so they do a big business. And so he's been through all of this. When you look at like here in Houston, because rates have been like all over the place, they're 6%, then they went to 6.5, then back to 6 and 7, then now 7.6. Like they don't know what to expect. None of us do, because it's changing like every day. And so here in Houston, it seems almost that when they do spike like that, you'll catch a lull, like no activity, and then they'll drop a little bit. Then the buyers come off the fence. You guys experience that same thing there?
Absolutely. So we've been looking and saying, all right, buyers, you've been telling me you're waiting for a crash. Can I tell you when you should have bought if you were waiting for that crash? You should have put a home under contract in that November, December timeframe, because that's when we saw prices really crashing down.
Yep.
And so that fell. So we saw at the peak of our real estate market was May of 2022. The average sales price was $497,818. And then it fell down to really January, which is $411,000. Okay. So I said, that means if you're a buyer and you're looking for this true window of opportunity, because you're saying you're waiting for this crash, that you should have contracted on a home between November and January.
For sure.
The problem, Mr. and Mrs. Buyer, is that by the time when the crash was happening, we've already now rebounded back up, because everything happens in the past. So we're looking at the last 30, 60, 90 days of data. That's historic now. You can't go back and change that. What we're looking at is the present. So you can't tell me when a crash is going to happen. Because by the time you know that a crash has happened, we're already way past it.
Yep. So when you look at that, like, I don't know how Dallas is, but here in Houston, because our inventory is so low with resale homes, new construction, of course, has ramped up for the last 9 months. They're building like crazy. Are you guys seeing that too?
So yes. So yes and no. So here's what we have right now. So let's stay on single family pre-owned.
Okay.
Our inventory levels have increased to 2.6 months.
Okay.
Right. And that's been
still a seller's market. Yeah.
So it's still a seller's market, but that's a drastic increase from, we were at 2 months. So 2 months in February, so to 2.6, which doesn't sound like a lot, but really when you look at this curve, it's quite a bit, because we had stayed less than a month of inventory, right at a month, a little bit lower since really 21. And the highest, our peak over the last 3 years was April of 2020, when we had 2.9 months. And we're at 2.6. So if we go to new construction, we've seen inventory levels drastically fall, because everyone started to go make offers on it, right? The builders were making deals. They were buying interest rates down. They were throwing in the fridge, the kitchen sink, everything you wanted. The builders were giving it to you.
Yep.
And that's going to start slowing down, in my opinion. When we really look at it, our pending new construction sales for single family are down from March. March was our peak of this year at 2,300, basically 2,300 pending new constructions down to 1,900.
Wow.
Our closed new construction sales are down. and the days on market for new construction, now those are going down, but really what we look at is the average sales price has stayed flat.
Yeah.
Since June of 22, we've fallen really to stay right around that $485 to $490,000 mark. So there's other than you can get brand new, there's not much of a, one way or the other of what's a better deal, other than you can get a brand new construction house. But more than likely, you're going to have to go, and at least in Dallas, in the Metroplex, is you're probably going to have to get further out than you would like to be. And so you're making some compromises on the location.
Okay. So what we've seen a lot here is, because we have no inventory for resale homes, we can still sell your home for a pretty good amount if it's priced right, of course, and looks right. So we've had people are in financial situations. There's a lot of that here in Houston. And so they're having to sell. And so they can't find anywhere to go. New construction's not done yet. It's all being built out here because we have a ton of new construction on the ground, being built, being developed, already plotted, everything. So a lot of people are going from their homes, going under contract on a new construction, but having to become an apartment renter for now while their home is being built. Do y'all have any of that going on there?
A little bit. What we do see is if they're building new construction, what's typically happening for our clientele is they're waiting to try to time their sale versus. Okay. So we're looking at 3 months would be really short. Yeah. Before their new construction is ready. We really like to say get in put your home on the market 4 to 5 months before your new place is officially done. Now, always keep in mind that they're more than likely with builders, there's going to be some type of building delay. So when they give you a timeline, it's probably 2 to 4 weeks going to be past that. And let's get your home on the market 3 to 5 months prior to that, the new home being completed, so that, number one, that we don't run into any desperate situations where you feel trapped or you feel like you just have to take the lowest offer, or that you have to terminate on your new construction. And now you've lost your earnest money deposit, which I know builders, at least here in the Dallas-Fort Worth area, are charging, quite a bit to tie up a property.
Interesting. So here in Houston, we've got a lot of communities, new construction, that will let you do $1,000 earnest money. $1,000, Nick. It's like, that's unheard of. We haven't heard that in years. $1,000.
Yeah. We're not seeing that as much here. I mean,
wow.
Our demand is still really strong. Okay. And especially if they have to sell. I mean, it might be a little bit different if they don't have a property to sell. Sales reps are going to be a little bit more lenient. Yeah. But I mean, we have seen new construction inventory increase. I mean, we've got about 400 more new construction listings that hit in June compared to May. So we've seen a little bit of an increase, but not much.
On your new construction here in Houston, of course, when they started all this, it's because we didn't have any homes to sell. And so they were like, oh, the sweet spot is these little homes. So what you're finding all across Houston, especially in the suburbs, is little homes on smaller lots. Are you guys seeing that there?
I mean, they've definitely kind of scaled back. Oh, yeah. Lot size, housing size, everything's been scaled back. I don't have averages. I don't have averages on that, but we're definitely seeing those way to find to keep it more affordable as much as they can, which typically means smaller house on a smaller lot.
Yeah, we're seeing a lot of 40 to 45 to 50 foot lots.
Yeah. 40s. Yeah, that sounds about right here as well. Yeah.
Crazy though, when you look like how long you and I have been doing it, it's like you never had heard of a 40-foot lot. It's like, what does that look like? What is the footprint? That's small. Holy crap.
Well, I mean, it went from I think Houston was the same way as this, is it went, the opposite, where we were just building these mega McMansions. Yep. On even smaller lots. I mean, they would take up you'd have a huge house and a tiny backyard. Yeah. And that trend started to go away. And then ultimately what we're seeing is still more for the lifestyle, right? It's the lifestyle of we need to make sure that we have the office space, because we're still seeing a lot more remote workers. Even though a lot of jobs are requiring them to go back in the office, it's not full time.
No.
So they're having to they're working from home part time and then go into the office part time.
Okay.
So we're seeing that. Does it have the right office setup space? Does it have the right yard space? So we're still seeing a little bit of that COVID style demand of making sure that the layout really fits their needs and not compromising too much from that.
And here in Houston, when they are building these smaller homes too, because you have to think of affordability, like you said, it's like, okay, well, people can't. I mean, the people that could afford an $900,000 house are not now. Now they're like $500,000 and $600,000. So all of that is relative. So if they could afford $400,000, now it's $300,000. So I've noticed in the smaller homes that because people that are going to buy a $500,000 house, they like nice things. I've noticed that the finishes inside the smaller homes, they're as nice as they can be. They're not like they used to be, where they're plain Jane, starter homes.
Correct. Yeah. Yeah. Very high end finishes, high end appliances, and just aesthetically has those clean lines and kind of that luxurious feel.
Yeah.
I always say that luxurious, that think of the best hotel you can think of, kind of
For
that,
sure.
especially when you walk in those models, those top end linens, clean, refreshing looks.
It matters. It matters when you could once afford, $600,000 house, and now you can only afford a $300,000 house because of the rates. It's all relative.
Yeah.
Let's talk about apartment complexes, if you can. Here in Houston, of course, because people were selling their homes and had nowhere to go, developers were like, well, let's build more apartment complexes, because the complexes were at max capacity. They were all full. Well, of course, there's always that philosophy. You got to go big in Texas, I guess. I don't know what it is, but they just build. And I don't know if anyone's like watching, like, hey, maybe we should slow down a little bit. Maybe we're overbuilding. Well, they're overbuilding. And now there's apartment complexes everywhere in Houston, everywhere. And they're struggling. They're struggling to fill them. They're struggling to pre-lease them. So for the first time in the last 4 years, we're actually seeing apartment rents on a decline. Are you guys seeing that there?
For sure. So just to give you a narrative on it, this is like, just quickly Google this, right? Just to give you some context. So I just did DFW apartment demand. And the first thing that comes up is Dallas added, and this was 1st of June, end of May, 1st of June. So it's really, really relative and updated info, is that the Dallas market added more apartments than anywhere else.
That's crazy.
It is. Yeah, it's insane, than anywhere in the nation in the past decade. So 4 of the nation's fastest growing submarkets over the past 10 years were in the Dallas market. And so what we're seeing when we look at rental growth or just the rental outlook, is that for the first time in years, we've actually seen that our rental prices have plateaued.
Yep.
So in some areas, we're actually seeing a little bit of a decrease, but we're really just seeing that it stayed flat. Our outlook here, though, for the long term, is that it will, apartment rents will stay strong. So if you're thinking that may be an opportunity, it's probably not, because we still have a lot of relocation market coming in here. Yeah. We still have a lot of jobs. And so what we've seen is right now there are more than 74,000 apartments that are being built. And that was at the first quarter, which is up compared to 65,500 compared to last year. So we're still outpacing, apartment building. Yeah. So, we might see a little bit of that plateau for a little bit, but as long as corporate relocations and job growth stays strong, then the population will move here, and they've got to find a place.
They do. Yeah. I mean, everyone's got to find a place, because people are still, at the end of the day, dying, having babies, getting divorced, getting job transfers, losing their job. I mean, all that's still happening, period.
Yeah, absolutely.
Now, one thing that we're seeing all over the news, of course, is Airbnbs. And Dallas is the talk of Airbnbs, too. Are you hearing much about this chatter?
For sure. I mean, we've got, I don't personally have and know many investors in the Airbnb market here locally. But I mean, Dallas just put a ban on Airbnbs. There's a few pockets that they're still allowable,
Okay.
but it's a very small area. So it's what will be interesting to see, and I've yet to have anybody reach out just yet, but it'll be interesting to see, can these Airbnb investors convert those properties into long-term rentals, and do they make sense? Because we've seen a lot of these Airbnb investors buy properties at such a high price that it only made sense as the short-term rental. And the minute that they transform that into a long-term rental, then they're now losing and have negative cash flow. And so what that could start seeing is that we start seeing inventory, those homes go on the market. Could we see a little bit of delinquency and from the lending side, possibly? But it's not gonna have that much of an effect on our market. It's like throwing a tiny pebble into a big lake.
Okay. So I was telling my team in our meeting yesterday, it was like, when you study like Airbnbs, and it's not just because there was some markets that are getting hit really hard. Dallas was one of them, it said in this report, for Airbnbs, because there's a big demand for Airbnbs, or Florida too, like a huge demand was in Florida. And Florida's going through this whole bit of turmoil. But when you looked at the report, it was like, okay, there are a lot of, like you said, investors that scooped up 5, 10, 15, 20 Airbnbs. And if they're in one of these markets that's Airbnb has already been banned or struggling, or you've got controversy, what is going to happen with those? Like, can those investors sustain them, like you said, and turn them into a long-term rental? Because that's definitely going to decrease their cash flow if there's 10 or more, a whole lot. So is that going to be what helps us with our inventory? Is that going to be what shifts things? What's your thoughts on that as like a whole for our economy?
I mean, I think this is overcorrecting of everything. I think there's definitely going to be a happy middle ground. Like here in Dallas, it's banning of single family STRs, but it doesn't ban the multifamily. Right. So there's always that little asterisk in there that if it's a multifamily, or maybe it's commercial, that can also be residential. So you're still going to have those. I think what it will do is number one is everyone jumped on the STR bandwagon that didn't even know what they were doing. It just so happened it was the luck of the draw. They bought it, they put it on there, they furnished it, it looked cute. They got with a good management company, but they didn't run any economic numbers. So they didn't have any backup plan that, and I always said is like, anytime that you buy an investment, you need to know you have to have alternative plans in place. And if it only made sense as a short-term rental, then I personally wouldn't put my money into it, because I wasn't worried about bans. That was at the bottom of my list. I was more worried about economic downturns. And when recessions hit, typically we see, especially in Dallas, why are they staying at an STR?
Right.
Staying here either for a convention. Maybe they're going to some concert. Maybe it's a graduation or whatever. They're not coming here just to vacation per se. There's very few of that. I mean, Dallas doesn't have that appeal the way, a beach or vacation or a true second home city does.
No.
And I definitely think it's going to have a rude awakening for someone who just jumped on the bandwagon, didn't do any true due diligence about what would happen if shit hit the fan on it.
Yeah.
And there's roughly about, at least in Dallas County, there's about 1,000 STR properties that would fall under the guise of now being illegal. So,
which is quite a bit.
That is a lot. So what are they going to do? I don't know.
Right.
Are some going to just operate and just figure it out and not operate within the legalities of the law? Are some going to just sell it and outright get rid of it? Are some just going to just carry it at a loss and sell it in the future, which is still going to be fine. You can have a negative cash flow and sell it in 5 to 10 years and actually come out way ahead as long as appreciation outpaces it. So I don't know. I mean, time will tell. I have a feeling that there will be some lawsuits that come about on it, and
I agree.
we haven't heard the end of it yet.
Oh gosh, no, it's just beginning. But even look at that numbers, like 1,000 that you just said, STRs. What if 400 of those hit the market? Just think of that. That's a lot of homes to come on for your inventory.
Well, and if you can't afford, because I'm going to assume that a lot of these investors can't afford
Sure.
to carry the note very long.
Right.
So what does that do to pricing as well? Are they
Correct.
just going to get desperate to sell it? Or are they going to fall behind? So now it has a negative impact on their credit. Are we going to see some short sale opportunities in there?
Yeah.
Maybe we see a little bit of some foreclosures, but again, it's a very small pebble thrown into a big lake or ocean. The ripple effect is so tiny that it's not going to cause that's not the shoe that's going to drop. That's going to cause any type of crash.
Let's talk about foreclosures like you just did for a minute. We are hearing signs of foreclosures here in Houston. We're dealing right internally in our own organization. We have several sellers that I'm probably getting at least a call every other day from seller that we went on a listing appointment and they didn't disclose to us that they were in financial hardships. And then a call comes in the next week and like, actually, we're going to need to get on the market like ASAP because this is what's going on. We're having many more conversations here in Houston. How about Dallas? What are you guys seeing?
I wouldn't call it many more. I'm looking at overall Dallas Fort Worth data report here, and what we're seeing at this very moment, it's so tiny that it's not going to be anything major. I will say that I'm not having anything that sticks out that it's like, oh, this is a red flag, right? So you're seeing that a little bit in Houston, and I would always say that the Houston market is very, very sensitive to what's going on economically. Yes. Right, a lot more than Dallas is. So we've never really felt that, and we have here. Let me see here, foreclosures. I don't even keep track of the foreclosure report as
because it's just not a factor for you guys.
It's not a factor. I mean, if I look at it, according right now to one of the reports, Texas is the 19th state with the highest foreclosure rate. So. Yeah. As it only is reported 2,678 foreclosures, and this was as of March. So when we really look at it, that's not that much. When you look at Texas as a whole, when you look at Dallas, it's such a small percentage. It's less than 3%.
Okay.
So we're just not going to see it. I mean, are there people that are falling behind? Sure, we've talked to several of those. Yeah. Are there people that are coming to us and finally opening up and saying, I have this much runway left? They're not delinquent yet. Sure. And most of these home sellers that are really in a desperate situation are someone who bought in the last 2 years. They don't have a lot of a major equity buildup that they can actually, sustain selling and not be upside down.
Yeah. What we're seeing weirdly, and I've never seen this before, the ones that, and especially the ones that we're dealing with, are elderly. And when I say elderly, they're almost all of them are 70 and above. We have several that we've talked to internally in their 80s. And it's not that they've either come into a death, their spouse has passed away recently in the last couple of years, and they've tried to sustain their mortgage and their bills and everything on a fixed income. And of course, with inflation, everything costs more now. And so every month they're just a little bit behind and a little bit behind. And now a year later, they're like, I'm a lot behind. My credit cards are maxed out. And on a fixed income, what do? You can't create another job, especially when you're 78 years old. And so thankfully, they all have a crap ton of equity in their homes. A ton, but the market here isn't in such where they're going to have 40 offers on their home and we're going to sell it for 80 to 100,000. That's over, but we will get it sold. But it's interesting to watch that because here they thought that they had prepared for the end of their life or whatever, their later years. And now they're having to sell because they can't afford to live in their house that they've been in for 20 years. And it's sad, but it's happening. And We just lost Nick. He'll jump back on. But that's the market that I'm seeing here in Houston. So when Nick jumps back on, we'll see if he's having any of that. So I hope you guys are getting something from this market update. I'm like obsessed with the market. I think you should always know the value of your assets at any age. And so I think it's like so important. Here comes Nick.
Gotta love technology.
That's hilarious. But are you seeing any of that there with the older people?
A little bit. Again, it's not much to, I would say that most of the clients that we're seeing are at this moment are looking to move out of Texas. I mean,
Okay.
a lot of it is the boomerang type of clients.
Okay.
And these are the ones that have moved here from another state, take California, and they're going back home.
Okay.
A lot of it has to do with weather. Some of it's politics. And, as we hit these hot summer months, I mean, this summer with El Nino is really, it's really bad.
It is.
And I mean, I talked to a guy that was selling his furniture. I think it was yesterday, or the day before, and he's moving back to California. He's like, I'm one of those boomerang people. He's like, it's okay here, but the weather sucks. And we can work remote. And so we're going back to California. So cool.
Crazy, isn't it?
And yeah. And so, we're seeing a lot of those. We're seeing a lot of people that, we're still seeing a lot of people that are trying to take advantage to upgrade their home.
Okay.
And they should have taken advantage of it a lot sooner.
Yeah.
But, people procrastinate. Selling a house, it takes a lot of work. It's a lot of energy, a lot of unknowns. And it's scary.
Yeah.
And, so we're seeing a lot where they're finally like, okay, let's just do it. What can we get for the house? Prices are still good for them. Not as great as it was.
Sure.
Demand it's not going to move as quickly,
Nope.
which while that frustrates them, at the same time, it gives them a sense of relief, because what it allows them to do is gives them some breathing room so that they're not having to worry about, oh, my house sold in hours. Where do I go?
True.
And so, and a few of the elderly clients, but honestly, we've seen that. I've seen that for almost 20 years. I've been in business. That's usually a common theme of, it's just like you said, it's maybe one of their spouse died.
Mm-hmm.
And they wanted just the connection. They wanted to hold on. They held on as long as they could.
Yep.
Their family's not really helping out to take care of the house. The house is starting to take a toll on them. They can't keep up with it. And it's not necessarily they're falling behind, but it's becoming such not just a mental drain anymore. It's a physical drain just to try to keep up with it. It's becoming a burden on the family because, only one parent's living in the house. It's really big. And so, and they finally call and they say, you know what, Nick, we're ready to sell, or I'm ready to sell. I'm going to move to an assisted living. I'm going to move to, a retirement community, whatever that may be, or I'm moving in with my kids.
Yes. A lot of that. Let's talk before we end this, because I love all of your insight and I appreciate everything that you do, because I know what you're talking about. You're an expert. Let's talk about interest rates for a minute. Now, I know neither one of us are we're not in the mortgage industry. That's not what we do per se. What's your thoughts though on we're in the last 6 months of 2023? What are you thinking? What
I don't even know. We read all the reports of what we think is going to happen, and by now we should start seeing that downward pressure on pricing. The Fed is kind of all over the place. They did pause raising rates. I think it's temporary. But the expectations are we should next year start to get back in stabilize in the sixes, maybe even the lower sixes. And then by the end of 24, beginning of 25, we're somewhere in the high fives. To me, interest rates should never be a reason why people buy or don't buy.
Yeah.
It just doesn't make sense to me. Right. And ultimately there should always be a reason, you should buy a house because it fits the lifestyle that you're looking for, or that you truly need more space, or you truly need to downsize.
Yeah.
And if payment becomes an issue, then we need to find a way to either get your interest rate brought down.
Yeah.
And the struggle I'm having with the real estate professionals is that, and even lending professionals, is that they truly don't become an expert of how interest rate buy downs truly affect and impact in a positive way home buyers and home sellers.
For
So
sure.
I'll give you a quick example. I helped a buyer. They relocated here from New York, and they bought a townhouse. And originally this townhouse had been sitting, and they're like, look, it was listed at 430, and they're like, oh, let's get aggressive. Let's go in at 375. And I was like, look, they're not going to take it. I'm just telling you, they're just not going to take it. I said, why don't we do this? What if we were to come in and offer them 430? We asked for $15,000 in closing costs. That's a net 415 offer to the seller, the homeowner. And then you guys use that to buy your interest rate down. And then we got with our lender, Mortgage Mike, who's amazing up here in Dallas. And Mortgage Mike showed them how utilizing all this, the seller concession with buying their interest rate down, it was like them getting the house at $371,000 or $372,000.
Yep.
And when my clients did the video walkthrough with Mortgage Mike, they were like, holy smokes, I'm paying we ended up getting it for $424, $10,000 in closing costs. So very similar.
Yeah.
And so it was $414 net to the seller.
Yep.
My clients got their interest rate bought down, and it was like them getting it for $372,000.
Yep.
And the problem is real estate professionals don't understand how to explain it. They're not, and buyers they can't mentally grasp how this works.
No.
And a lot of our lending professionals are newer. They got in during COVID, or they got in during 2019, or even they got in even in 2016, 17, 18, when rates were already low, they didn't have to sell on rates or care about rates. And now with rates being higher, you're seeing the old time the lending professionals who were in it in the 90s. And really the old timers that were in the early 90s when interest rates were up through the roof. This is what they did way back then.
Sure.
And it works. And my problem is real estate professionals are not understanding this at a high level so that they can put their clients in the best position to win. And their best position to win is not just coming in with the lowest offer.
No.
Right? Because all that matters to your buyer more than likely is not the sales price. It's what their payment is.
Correct.
Right?
Yes.
You don't go you go to a car dealership and you're like Tricia, I want a car for $50,000. And they're like, okay, they start selling you like, I don't really like this. I like this $60,000 or $70,000 car. They don't ask that. They ask, what do you want your payment to be?
Yep.
And then they work around the payment and show you the cars that are available within that.
I think, what's crazy is here in Houston, thankfully, I have a large network of people that I talk to and from all different companies. And 2 weeks ago, I got asked to come to this mastermind, and it was it was Keller Williams, Remax. It was team leaders or market center owners from all different companies. And the purpose of the meeting was, let's form a group, kind of a state of the market, and let's put an event together, and not a recruiting event, nothing other than we have got to educate these real estate people because they don't have a clue what they're doing out there. And there's a better way to change our industry. And I thought that was so cool because it's like, you're right. And I'm the one been down here preaching about it forever. I would love to be part of that because I think it's such a need in our industry.
100%. Yeah. Yeah. And our industry did a better job during the Great Recession. They're not doing a great job right now.
No.
And I would venture to say we are already in the recession.
Same.
The government is not saying it yet, but look, they're also about to start election campaigning the year next year. So they don't want to say that we're in a recession yet, even though we are. So times, if you really look at it, times really haven't been that great. Inflation's been high. Interest rates are high. Prices are high on everything.
Yep.
So ultimately we still have to everything still moves on and we're not in crisis. And our unemployment rate is still really, really low.
Yeah.
So there's a demand for jobs, and people are paying well. You just have to go look for it. And so ultimately, if as real estate professionals in our industry, we have to do a better job of educating ourselves so that we can educate our clients,
Yes.
so that we can put our clients, and even our businesses in the best position to win. The more that we can educate our clients, the more that we can help them, the more that it's going to help us.
I love that. So I hope you guys are paying attention. I told y'all Nick was a freaking expert and a beast, and he is. So Nick, on final thoughts, like for anyone listening to this, whether they're a home seller, a home buyer, a real estate agent, what are your final thoughts on what they should do? Should they sell now, buy now, get into real estate now? What are your thoughts?
I will say, and I'll always say this, it's always a good time to buy or sell. Or if you want to get in real estate, it's always a good time, just depending on your situation. Doesn't matter what type of market. We could be in the best real estate market we've ever been in. It could be the worst time to sell or buy a house for you. We could be in the worst, and whatever the definition of worst real estate market is, 2008 crash. And it could be the most amazing time for you to buy or sell.
Yeah.
And so it's just dependent on your situation. And I will always say it's an amazing time to buy, sell, or get into real estate. If you're going to get into real estate, I will leave you with this, is that our industry is made up of, unfortunately, a lot of, and this is a term from a survey that was done by consultants at the National Association of Realtors, marginal agents. And marginal agents are agents that sell less than 5 houses a year. And so we need to do a better job as real estate professionals, again, to be able to best put our clients in the best position to win. And so, we all have to start somewhere, but the average real estate agent is not increasing their transactional sale count, which gives them the experience to be the true real estate expert. And I'm gonna be honest, I don't want a real estate agent who sells less than 5 houses a year representing me on one of my biggest financial assets, whether it comes to selling it so that I can truly get max dollar and max money in my pocket, or buying, because I don't want to find out that I could have gotten a better rate. I could have gotten a better deal, or they missed out on something that was so obvious that an experienced real estate professional would have pointed out, or compromise the service because they're part-time.
Yep.
And they're not giving me the service that we all desire and that we all deserve.
Absolutely. You couldn't have said that any better. I love all of that. You guys, I hope y'all have really enjoyed this. Share this message for sure, because he's in the Dallas-Fort Worth area. He just gave you the facts. So no, we're not in a crash. The market is really good. Great time to buy, great time to sell. And if you're looking at getting into real estate as an agent, you need to pay attention to who you're paying attention to. You need to reach out to Nick, because I can promise you most team leaders and broker owners and brokers don't do the things that Nick does with his company and his team. It makes a difference, definitely, on your success. Where can I find you, Nick?
Everywhere. Nick Good, nickgood.work. You can go to Buy the Good Way, BUYTHE, Good Way. So Buy the Good Way, or thegoodhometeam.com, or just Google me, Nick Good, realtor. You can find me anywhere. The Good Home Team.
He's awesome. Thank you so much, Nick. I love kicking this series off. Doing it with you. You're like the best. Thank you so much.
Thanks for having me.
Yes. Bye, guys.